Hi traders, you're welcome back to the Forex Geek channel. In this video, we are going to be diving into one of the most powerful yet underrated techniques in trading, and that is how to trade multiple time frames. Okay, if you've ever placed a trade that looked perfect on one chart but completely failed, chances are you were not looking at the bigger picture. Okay, now multiple time frame analysis helps you see the full story of the market, improving your entries, exits, and overall trade accuracy. So stick around, because by the end of this video, you'll know exactly how to apply multiple time frame trading to your strategy. Before we jump in, hit that like button and subscribe for more high value trading content. All right, let us just quickly get started. Now, one of the biggest mistakes traders make is relying on only one time frame to make decisions. Now, the problem, every chart tells a different story. Now, let's just do a very quick practical. Now, you can see this is the daily chart, right? This is the daily chart. Now, just take a glance at this daily chart. Take a glance at the 4-hour chart. Take a glance at the 1-hour chart. Take a glance at the 30 minutes. Can you see that the charts, although there might be some similarities at times, but they're telling different stories. Yeah, the daily chart might be saying that we have a strong sell at the moment. The 4-hour chart is saying that, yeah, we actually had a strong sell. Now, in this case, it is had. It's past tense. We had a strong sell, but now we are looking at a possible reversal. That is what the 4-hour chart is saying, right? Now, come to the 1-hour chart. The 1-hour chart said, yeah, we actually had a sell. Yeah, we had a significant sell, but now we are in a consolidation phase. Okay, then the 30 minutes chart is saying, let's just zoom out a bit. The 30 minutes chart is saying we are in a consolidation phase. We are in a consolidation phase. Then the 15 minutes chart is also saying that we are in a consolidation phase, but seems to be a wide consolidation. Can you see that I have to zoom in? I have to zoom out for it to look small, because when I zoom in, it looks like a wide. When I zoom in, I have to zoom out for it to look small. But when I zoom in, it looks like a wide consolidation. Can you see? So the 15-minute chart is saying, wow, we are actually in a consolidation phase, a proper consolidation. Then what about the 5 minutes? The 5-minute chart is saying that we are in a sell trend currently, or we are in a state of undecision. Can you see? Because we are having sort of a symmetrical triangle pattern forming here. So the 4 hours, the 5 minutes chart, you can see that a lot of things have happened within this consolidation being identified by the 15 minutes and 30 minutes. A lot of things have happened, because here you're going to see that we had a consolidation here, and then we had an upward move, and now we have a downward move, and now we seem to have a symmetrical triangle forming. Then if you come to the 1-minute chart, the 1-minute chart is going to even give you a lot more information, because this is the smallest time frame. So now we can see that the 1-minute chart is saying that we are having an ascending triangle pattern. We have a state of indecision displayed by the ascending triangle pattern, but the bullish momentum is prevailing. That is the reason why it's an ascending triangle, because in as much as it's a consolidation phase, but there is a likelihood of the breakout happening in the bullish direction. So now basically you will see that the different time frames are, although there are some similarities, right, but they are telling different stories. Okay, so by analyzing multiple time frames, you can identify the dominant trend and avoid trading against momentum. All right, you can fine-tune your entries on lower time frames for better precision and confirm your trade setups, reducing false signals. Now, this method works in forex, stocks, and crypto, no matter what you trade. So how do you pick the right time frames? It depends on your trading style. Actually, you don't necessarily need to go through all the time frames on your MetaTrader platform. Okay, you can just select few time frames to monitor. For scalpers, which are short-term traders, you can actually use 1 hour for your higher time frame, which you're going to be using to identify the main trend. So in this case, you're going to use the 1 hour to identify the main trend, and then You can go to the 15 minutes chart for your trading, okay, to look for trade setups. Basically, you can use the 15 minutes chart to look for trade setups. Then you can go to the 5 minute chart for your entry. 5 minutes chart could be your entry time frame, so you can use it to pinpoint the best entry. Then if you are a day trader or an intraday trader, you can you can use the 4-hour chart for your higher time frame to spot the trend direction. All right, then you can use the 1-hour chart for your trend, your trading time frame, to look for, to find trade setups. You can use the 1-hour chart to find trade setups. Then your entry time frame could be the 15-minute chart to get precise entries. Then if you are a swing trader, a long-term trader, you can actually use the daily time frame for your higher time frame to define the overall trend. All right, then you can use your 4-hour chart, for your trading time frame to spot the best trade opportunities. And finally, you can use the 1-hour chart to refine your trade execution. Your entry time frame could be the 1-hour chart if you are a swing trader. So using this 3 time frame approach, you can see how the market moves on different levels while staying aligned with the bigger picture. Now that you understand the concept, here's how to put it into action step by step. The first step is to identify the trend on the higher time frame. All right. Then you look at the higher time frame to determine the overall trend. Okay. Then if the market is making higher highs and higher lows, for example, it's an uptrend, okay, you should focus on buying opportunities. But that trend identification has to be on the higher time frame. So if you notice an uptrend on higher time frame, then you should be looking for buy opportunities on your entry time frame, on your analysis time frame, okay, or rather on your trading time frame and your entry time frame. Then if the market is making lower highs and lower lows, then it's a downtrend and you should be looking for selling opportunities, okay. And the second thing to do is to find your trade setups on the medium time frame. Remember that the higher time frame is for identifying the trend. Then the medium time frame is now going to be for finding your setups, okay. Switch to your trading time frame, look for patterns that confirm the trend. This is where you're going to spot support and resistance levels. That's where you're going to spot all these levels, okay, on your medium time frame. This is where you're going to look for support and resistance levels, trend line bounces, and breakout opportunities, okay. Then finally, the final step is to pinpoint your entry on the lower time frame. Okay, now you move to your entry time frame to get a precise trade set up. Okay, you look for price action signals like candlestick patterns, breakouts, or retest. Okay, and then a well-timed entry reduces your risk and improves your trade accuracy. Even with multiple time frame analysis, there are a few mistakes traders make. So here's what to avoid. The first thing you should be avoiding is to ignore the higher time frame trend. Okay, do not trade against the dominant market direction, and do not force entries. If the lower time frame setup does not align with the higher time frame trend, do not take the trade. And also, it is bad for you to switch between too many time frames. Just stick to your structured 3 time frame approach to avoid confusion. Okay, if you follow these rules, you will avoid unnecessary losses and improve your decision making. All right, traders, that's a complete breakdown of how to trade multiple time frames the right way. Use the higher time frame to identify the dominant trend. Use the medium time frame to find trade setups. Use the lower time frame to time your entry with precision. Mastering multiple time frame trading can take your analysis to the next level, helping you make smarter and more confident trading decisions. Let me know in the comments, what time frames do you use the most? I'm going to love to hear your thoughts. If you found this video helpful, don't forget to like, subscribe, and turn on notifications. More game-changing trading content is coming your way, so stay tuned, okay? Keep learning, keep improving, and I'll see you in the next video.